states celebrating Memorial Day. Uh, Lots going on in the market. Lots have happened since Friday when we did our last update. We talked on Friday. We're kind of avoiding the market Friday. Just we had mixed biases coming into Friday morning. Lots happened. Light volume traded Friday, light volume traded yesterday, but the market's obviously still moving in off hours electronic trading. So coming into things today, kind of getting a lay of the land, seeing what we're going to do, how we might take action. Obviously, I'm going to sound like a broken record with this, but the way we take action is by simply trading our plan, not trying to figure out what happened over the weekend, why things happened over the weekend. My cat's talking to me this morning. Not trying to figure out what happened over the weekend, why things happened over the weekend, and then taking an action on that. That's trading from your gut. It's trading from what other talking heads might be saying. It's not really trading based on anything that's quantifiable. So be careful with that. It's easy to do. I mean, obviously, I came in this morning and I'm looking at it and I'm going, okay, well, we've got this happening and this is a headline and this is some things happening in the news, and those things, once the market opens, could drive this. But you got to get rid of that. You really do. You've got to get rid of it and just say, okay, wait a minute. When I'm ready, we all have our opinions about what the market's going to do, and that's fine. But when we're ready to take an actual action, or we're actually ready to push the button on a trade, and if we truly want to give ourselves a trading edge, we have to take action based on our trading plan and be consistent with the application of that. It's the only way we'll ever get consistent results. If we don't, we end up chasing our tails and fighting that battle where a lot of traders just go around and around and around. Win, 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 loss, 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 win, 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 loss. Which, obviously we're going to have wins and losses, but kind of chasing the tail where they might have a little move forward and then a big move back, and a little move forward and a big move back, and it's because we get cocky, or we start breaking our plan, or thinking we know better than the market, or whatever it might be. Trade your plan. So what we're going to do this week, I'm going to run really quickly through the markets, and then what we'll do this week is we'll get into, I think tomorrow will be a good day to do it, just talking about how do you actually create a trading plan. Because I know I say it all the time. I've given you a couple different ways to trade. I've talked about different methods you could utilize. But how do you actually create a plan? I think that's also a place where folks get stuck, which is what makes it appealing when people say, oh, I've got a system I'll sell you, right? That makes it appealing because somebody else already did the work in theory. But you need to do the work yourself. You need to take whatever system that is and make it your own by making small tweaks and just changes that fit you, your trading style, your trading personality. So what we're going to do tomorrow, because I'm going to be very quick about this morning's market, is we'll talk about how to actually create and then back test a trading plan. Obviously, and we'll talk about the pros and cons of doing that, and what to expect, and how to forward test once you've back tested, and so on and so forth. But that'll be the focus for the week. Today, let's just really quickly run through this, because while there's been a lot going on, there's also still a lot to digest before we take any kind of an action in the marketplace. And it's very important to have a very clear action. I cannot stress that enough. I can speak from experience. Whenever I, take that big tumble or have in the past, it's because I've stepped away from the trading plan, or I thought I knew better than the plan. And the only way is follow the plan. All right. So anyway, let's go into it. What's happening in Forex? I'm not trading anything this morning in Forex. The reason being is, I look at the big moving currencies. So like we've had the pound's been a strong currency over the course of yesterday and into this morning. Big divergence between the pound and the USD a few hours ago prior to coming in here and firing up my systems. But if we look at the pound USD, for example, it's already moved a lot. So if we look at the pound USD, this has already moved 165 pips on an average of about 115, anywhere from 100 to 115. The 5-day range, it's going to be super low because obviously Monday didn't do much. Friday was light volume as well. So our 5-day range is going to be kind of messed up. but looking at the longer term 15, 30 day, we're sitting in about 115, 110, 115 pip range. We move 165 already for the day. Not a great. Now, can it move more? Well, of course it can move more. It can always do more. But just looking at odds and probabilities, based on normal conditions, what's the likelihood of it moving more? And it's not real high. So I'm going to stay away from that. Had a look at the CAD versus the yen. CAD yen, seen some nice divergence here. See what's over there with the CAD yen. Same deal. We've moved 74 pips for the day. Our average is about 70, anywhere from, I guess about 80 pips, just round up, right? Average is about 80 pips. So again, not a whole lot of opportunity for us based on just normal ranges, odds and probabilities. What's the likelihood? Can it move more? Of course. The only way you get an average is you have days that are significantly higher than the average, and you have days that are lower than the average, and it averages out. But, what's the likelihood of that just continuing on, and blowing on, continuing on this big upward trend that it's been on? Absolutely, it could happen. I would expect a little bit of a pullback at some point, but it could absolutely just continue to keep moving straight up. Long and short of it, though, is we've got divergence here, but we've already moved a ton, so I don't feel comfortable in taking a trade. And a lot of trading just comes down to being patient, right? The only way that you get a trading edge is to execute your plan. And the only way you can ever operate your plan is if you're patient enough to allow the plan to operate, right? The only way we've got to be able to let our setups actually set up and get the conditions that are necessary for us to potentially take a trade. So, and it's important we don't go hunting for trades as well. We need to go hunting for the trading opportunities. CAD versus the euro is a little bit interesting here. Although I don't know that I'm super interested in trading this morning, but the CAD versus the euro, or euro CAD rather, is certainly interesting. We're seeing the volume detail support a continued downward move. We've got divergence with the CAD moving to strength, the euro moving to weakness here on the 5 minute. We've moved 50 pips. Average, is about 100. So that one could potentially have some opportunity there. That might be some opportunity to see if that continues on. But I think I've already kind of resigned myself to not taking any trades this morning in Forex when I just looked at some of the initial moves there. So I don't want to force it. Certainly looks like a good trading opportunity, but I think I'll just wait and kind of stick to my plan to be on the sidelines for the day. Over on the future side of things, lots of movement over here. If we're just looking S&P, crude, gold. Why is that over there? S&P, crude, gold. Lots going on over here. S&P continues its long movement. If you look at the 4 hour, the bias is long. 30 minute, the bias is long on both of those. So if we're looking at the S&P, we would continue to look for potential buying opportunities. Of course, today, a lot of folks you're going to hear it. Oh man, we've cracked 3,000. We're at the top. People are going to be calling the top. Of course, people have been calling the top ever since the rebound began. Way back here. Every time it's moved up, people were calling the top. They're calling the top at 78.80. They're calling the top at 29. So now people will be calling the top again here at 3,000. So just be aware of that. Don't get too caught up in it. Is it possible that we kind of hit a bit of a top here and it pulls back? Yeah, of course. And there's a lot of stuff going on in the marketplace. If you want to be a contrarian trader, nothing wrong with being contrarian. Just have a reason for doing it beyond my gut says blah blah blah. It needs to be based on something quantifiable, right? Nothing wrong with being contrarian, just as long as you've got quantifiable reasons for why you're going to be contrarian. In this case, dang it, I don't know what's going on with my throat. In this case, though, we want to be, I shouldn't say we want to be anything, but if we're looking at the bias on the 30 minute is long, and the bias on the 4 hour is long. So we continue to look for long opportunities. To do that, we could look for pullbacks back maybe down to 3,000. I would say more than likely we'd see pullbacks down to the 2980, 2975 area where we had hit previous highs in the week prior. So I would certainly be looking for pullbacks over to this area, like down to here, as potential trading opportunities. But bias is long on both of those. I think maybe the better plan for the day is just to see what really shakes out. There's a lot of stuff coming up. Let's see what shakes out first day back after a long weekend. But I would expect, that if we got some retracement here, would be nice areas to trade off of. Looking over at crude, same thing. Still on a big upward trend. 4 hours long on the bias. The 30-minute bias is long over here as well. Of course, like I said the other day, folks are going to be calling the top. Not a lot's really changed for crude. A lot of this drive is limited production and then also hopium in the marketplace that things are returning to normal, which they are slowly starting to return to normal. I don't know if that really necessarily drove that much of a need in oil, but it is what it is, right? Again, trade whatever your plan is. The bias on both of these is long, so we'd be looking for long opportunities. That's the easiest way to look at the market, is to continue to trade with the trend. The trend will change at some point. Don't try to guess when the trend is going to change. Trade with the trend. Be prepared to be wrong. If it stops you out and the trend starts to change, wait until the trend actually has a confirmed change and then trade in the other direction. It's super easy if you allow it to be easy. Don't overthink it. Don't try to overthink it because you feel a need to trade. Be very selective. So again, just like with we talked about crude last week, S&P is the same way right now. We talked about crude last week where folks are going, my gosh, it's so high. I don't think it should be that high, blah, blah, blah. And you're worried about continuing to buy here on crude. We talked about it when it was in the 30, down here, at the 32, 33 range, and now it's at 34. If you're worried about it and you're that concerned about, quote, that you might be buying the top, then just stay away from it. You don't have to trade it. Or you could trade with the trend and say, well, the 30 minutes long and the 4 hours long, so we'd be looking for opportunities to buy. We've got a big level here at 33.50, which is our 4 hour level. Down here on the 30 minute, we can also see around 33.80 as potential opportunities to buy if it pulls back to. Just remember, at some point, things may pull back further or start to roll over, and if they do, we have to be prepared for our position to be wrong, and then we just wait until things change, or we wait until we get a better opportunity to purchase again. Don't overthink it. It doesn't have to be super hard or super complicated. Gold, we've switched. The 4 hour bias has flipped over. That's a rough one. I really dislike being short on gold, but it is what it is. We look at the 4 hour here, and 4 hour has flipped. The bias is short now. Really driven by this last big candle here, but it was starting to turn already. So the 4 hour bias is short, and our 30 minute bias has kind of been all over the place, but it was short, flipped, and then now it's short again. So we're certainly looking at a short 30 minute bias here. We've got some resistance up here at 1730. So if it did push up, the 1730, 1732 area is resistance for us. Obviously, another way to look at that would be if it breaks back down through 1724, 1725, that would be an area to take it short from there on a short breakout. So, if we're looking for a bounce, you could look up here. If we're looking for breakouts, we could look down here below 1724, 1725. So certainly, potential opportunity there. Of course, take everything with a bit of caution especially as the regular trading hours begin here in about an hour and 15 minutes. Things could get choppy for the first bit, until the market really finds its direction. So, I would be very cautious about taking anything ahead of the open of the regular trading hours. I would also be very cautious about trading right on the open of the regular trading hours, especially with a lot of the off, a lot of the off hours movement that we've had, over the last really light volume Friday and then all electronic volume yesterday. I would expect there to be, quite a bit of chop as the new session begins. So just be careful. I'm not telling you, again, I never tell you what to do. That's we're all adults here. We're going to do what we need to do. But follow your plan. What I am saying is just follow your plan and stick to that plan without letting your personal emotion come into it. So I'm going to let it go there. And tomorrow, let's talk about how to actually develop. How do we create that plan, and then how do we back test it? And what are the things that we would want to look at? What are some ways that, as we're back testing, what are some things you might want to measure so that we can figure out what the best way to approach that market would be for us specifically? And I'm going to try to keep it as general as I can so that you can take the steps, apply them, and then figure out the process that's going to work best for you. Because that's what I want you all to do, is to create your own plan. Again, trading systems are awesome. There's a lot of great people out there that I'm personal friends with that teach specific trading methods. However, I will say you're never going to be that person. So while they may get great results with that trading method, you may not. However, you can get great results with it if you take that trading method and make little tweaks to it that fit your specific personality and take into account the specific triggers that you have for why or how you make decisions. And that'll take a plan, make it your own, and allow you to see success with it. And that's what we want to do. All right, so I'm going to leave it here. It should be an interesting day today. Please, again, just don't get any fear of missing out. There's always another opportunity to trade. Don't force anything. Stick to your plan. Trade what the market tells you, not what your gut thinks is going to happen. All right, so that's it for now.